Good morning and welcome to Real Estate Radio Denver, the most important hour of radio every Saturday right here on News Talk 710 KNUS. I'm your host, Tom Souther. Thank you so much for joining me. As you know, Real Estate Radio Denver is dedicated to building Denver's housing market. We're here to give you some great advice, help you with connecting with some true experts in this marketplace, whether you're buying a home, selling a home, refinancing. Maybe you've got a credit issue that you need a little advice for. We're here to help, and we would love you to just give us a call and let me connect you with that right professional. As you know, I'm in the mortgage business, and I close mortgages with Citywide Home Loans. Love them, and it's been an interesting week. Before we get there, I want to give out our number. Because I encourage you to call and connect with us. It's off air, but please just give us a ring. We've got some great information today. That number, 720-515-1818. You might want to write this down, 720-515-1818. I will help you to put you together with that right professional. So within every market, there are some solutions as well as just tremendous opportunities. You need some trusted advice. That's what you're going to hear right here every Saturday from 9 to 10 a.m. on News Talk 710 KNUS. Today, I've got a great show for you. We have not touched on this topic in the last year and a half that I've been on. We're going to talk in the final three segments. Final three, that doesn't make any sense, but the end of the show on reverse mortgages. This is a great topic that I think you're going to want to know. If you're pushing up in the age bracket a little bit, you want to know if you've got parents that maybe need some help. This is great information, so stay tuned for this. But before I get started on that, I want to introduce one of my guests. I have two more coming in a little bit, but I have Tom Gysin, the owner of Homestead Title. Tom, welcome to the show.
Nice to be back, Tom.
Tom is a regular expert contributor and has been with me since pretty much from the start, and which I'm very thankful for. Tom owns Homestead Title. They do a fantastic job. If you need title work, that is your place to go.
Well said.
Yes. You're a local company. Love to do business with local guys. Tom is a little bit crazy. He started this business right at the middle of the downturn and survived.
Yeah, started October of 2009 when a lot of people looked at me like I was crazy. But you know what? It's been a good ride, and we've had 4 very nice years, but it's a challenging market. I think you would agree with that. And
it's interesting.
I'm actually excited to hear some of the new guests that are coming on here in the next segment, because I think reverse mortgages are something that a lot of people know the name, the terminology, but really don't know the specifics.
Don't know the pieces. And we're going to fill you in on all of the details. You're going to know everything. You're going to know everything you need to know about reverse mortgages in a nutshell. So don't turn away from this show for the entire hour. But first, Tom, the market has been a little crazy over the last month. It's been slowing down a little bit, I think.
You know what? And honestly, I would tell you in the last probably couple weeks, we've seen a slight pickup. So, it's hard to say. Obviously, rates have settled back down a little bit. I think with the government shutdown, that helped, obviously. But, I don't know, Tom. It's a day-by-day deal right now. It
certainly is, and I wanted to talk a little bit about rates. I can't throw rates out there due to licensing and all of the concerns that regulate how we can talk about rates. But rates are back down. If you were waiting, stop waiting. Man, I am a little frightened of the changes that are going to come after the first of the year. The final piece one of the final pieces of the Dodd-Frank Act is going to implement some of what they called QM, qualified mortgages, and it's going to change what you potentially qualify for.
That focuses mostly on kind of back-end debt ratios?
Debt ratios are going to be reduced, if they get implemented the way they're supposed to. So I'm encouraging people, man, if there's any way for you to get that transaction done before the end of the year, particularly if you're buying at the top of your qualification range, do it now. Rates are great. They're back down where they were a couple of months ago. I can throw out ballpark figures. If you're looking at FHA loans, you're probably in the high 3s, low 4s, which is just world-class rates. If you can possibly get a 30-year fixed rate that's in the 3% range, you always want to check your APR. and get the full details. But that's free money, virtually. So I'm going to throw out my normal warning, and I've been talking about this for the last month plus, it is a fantastic time to buy. There is less demand out there than there was 6 months ago. There are still, I think it's just a good time to buy.
Yeah, Tom, I
was
talking about
fighting so hard for that contract that as you were 3 or 4 months ago.
Yeah, we've talked on the show before about some of the reports that I have some access to and run the overall market and different segments of the market to get the trends of what we're seeing. And to your point exactly, it is absolutely cooled down to a more normal level market from the May-June spike where it was frenzy.
Yes,
and so everyone will say that. I mean, houses are sitting on the market longer, better opportunities for buyers at this point in time. So, great time.
Yeah, and I think this market is stabilizing a bit, which is good. And every little niche is different, but it's still a great time to buy. When you compare it to renting, if you're renting right now, please give the show a call. Let's walk you through the mortgage qualification process, 720-515-1818. You will be shocked at how easy it is to qualify. We've done shows on down payment assistance that you can get into buy a new home with virtually zero. I closed one 2 weeks ago with $200 out of pocket with my buyers.
Yeah.
I
was at an event last night, Tom, with the Denver Housing Authority.
Right.
And it was a cool event, very cool event, and it was neat to see. And we met some sort of the graduates of the program. But to your point on sort of down payment assistance and programs that are available,
yes,
it's amazing. I had no idea. There's actually a lot of money out there for people to tap into. I just don't think they know about those programs.
Yeah, and you don't necessarily have to be a first-time buyer. There's so many ways that we can help you get out of renting. Your rents are going up. It's cheaper to buy. I encourage you, if you have any chance of doing that, it's time to get it done. You're listening to Real Estate Radio Denver here on News Talk 710 KNUS. Our off-air number again, 720-515-1818. Come right back. We're going to give you all the details on reverse mortgage. Be right back. Welcome back to Real Estate Radio Denver. I'm your host, Tom Souther. I want to just jump right in here because we teased you with a show about reverse mortgages, and we've got lots of great information for you. If you've always wondered, what's that reverse mortgage about? How can I leverage that? Is it right for me? Is it right for my parents? This is the show that's going to give you all that information. So, grab your pen. We're going to offer you a great packet of information. You might want to write down the show number, 720-515-1818. You can leave us a message. You can text to that number. If you text reverse to that number, we will contact you to get you their information about the Consumer's Guide to Reverse Mortgages, separating fact from fiction. So we got lots of great info for you. Stay tuned. And I want to introduce my two additional guests. Let's start with Tom Gysin, owner, founder of Homestead Title. Tom, welcome back.
Thank you.
I also have with me from their company is called Reverse Mortgage Focus. Guess what? They focus on reverse mortgages. Pretty brilliant name. I have Eileen Kennedy, who is a reverse mortgage specialist. Eileen, welcome to
Thanks,
the show.
Tom. Appreciate being here.
And I also have Barry Scoles. Barry is the National Sales Manager for Reverse Mortgage Focus. And you guys just do reverse.
That's all we do, Tom. The Reverse Mortgage Focus is a division of Georgetown Mortgage, which is home-based in Texas, Georgetown, Texas. And we have 54 branch offices across 5 states. And the Reverse Mortgage Focus division is responsible for making sure that all reverse mortgage transactions throughout all of those branches are taken care of in the way that they need to be.
Awesome. So if we have a listener whose family parents live in Texas, you could help them.
Absolutely. We have branches throughout Texas.
Okay. Or a number of other states throughout the country. So, even if your family, parents, seniors that aren't here, you guys could potentially help them.
And Tom, even if we don't lend in that state, with our network, we can find a good qualified lender in whatever state they might be in.
All right. Well, let's jump in. I think the great starting point is let's just have a little discussion on what a reverse mortgage is, just so people understand what that whole product is about and who qualifies. How is it important? Who should take advantage of this thing?
Well, Tom, a reverse mortgage is probably one of the most misunderstood products that's ever been available in the mortgage industry. The reverse mortgage was actually introduced by Congress as part of the Community and Homeownership Development Act of 1987. So this program has been available since February of 1988 when President Reagan signed it into law.
So 25 years.
25 plus years. And the program continues to have a tremendous number of misconceptions. But in a nutshell, a reverse mortgage is a home equity loan. Seniors who own a home, who are 62 years of age or older, and own a primary residence, and that home has equity that they would like to gain access to, which is exactly what a home equity loan does. Is it gives you the opportunity to tap into the equity of your home. The only difference between a reverse mortgage and other types of home equity loans is that the way you qualify for that loan is different and the way you repay it is different. But everything in between is the same. It's a first deed of trust mortgage. The borrower continues to own their home. They do not give up title to their property. They're able to live in that home for as long as they like. They can sell that home anytime that they like. They maintain all their rights as a homeowner. It's just that they're able to draw that equity out, use it as they like, and not be subject to a monthly repayment of principal and interest.
Sure.
And that's the big difference is that you're not making a payment to the bank or the mortgage company. You're getting a payment. Is that right?
That's exactly right. Whether you choose to take your money out as a lump sum, whether you choose to draw against those funds as a line of credit, whether you choose to set up a monthly payment where you're actually receiving a certain amount of money every month, regardless of how you do that, there is no monthly repayment of principal and interest. It's important to know that the homeowner is responsible to keep their property taxes paid and the home insured. They are the owner of the home, and so they retain those responsibilities, but they're not required to make that principal and interest payment. And the key is that when they sell that home or they pass away and their heirs sell that home, typically there's still going to be equity in that home. So when that home is sold by the homeowner or their heirs, the loan is repaid. As a owner of a title company, you know how that works. Yep. Everybody comes to the closing. The title company has obtained a payoff. The lender is paid the principal and interest due, and all the remaining equity in that home belongs to the homeowner or their heirs.
So essentially, like any other closing, a payoff is generated based on anything that's been taken out on that loan. That gets done, and the balance goes to the heirs.
And that's exactly right. And the big misconception about this loan, Tom, is that people believe that they are no longer the owner of their home when they do a reverse, and so they think that when they pass away, that the home does not go on to their heirs. They believe that the bank has the ownership of that home and the bank's going to get the excess equity, and that's not the case. Right. Now, the most important part of this is the flip side of that if, in fact, that homeowner has lived so long and they've had their reverse mortgage for so many years that, in fact, the future value of the home is not sufficiently high that it'll pay off the mortgage balance, then people are in fear that this is going to leave themselves or their heirs with a debt. But that's not the case. The part of doing a reverse mortgage is that there's an FHA insurance policy behind this loan, secured through FHA, Department of Housing and Urban Development. That's an insurance policy like any other, and it says that if, in fact, the sale of your property will not pay off the entire loan balance, that the shortfall is paid by an insurance policy, not by the homeowner, the heirs, or the estate.
Yeah, that's great. So, in essence, if it has equity, the heirs get it. If it doesn't have equity, it's really not the bank's problem because FHA, the mortgage insurance policy is paying it.
That's correct.
Yeah,
that's exactly right.
Well, Barry, you threw out that misconception word, and I know that's one of the big things that big questions there are so many misconceptions about this product. What else is out there that people are thinking that isn't really true with these mortgages?
Well, just in an opening conversation, we've touched on some of the biggest ones. First of all, people think that they no longer have title to their home. They forfeit title. That's not the case. They remain the owner of the home for as long as they're alive and living in that property. That home is theirs, and they have all the rights and freedoms of any homeowner.
So if they chose, they could switch out of that mortgage back to a traditional if they
Absolutely.
chose. It's a payoff like anything else. Pay it off, refinance it.
And with no prepayment penalty whatsoever. They can pay it down partially, fully. This, again, is a misconception that people have, is that they think if they have a reverse mortgage, they can't make a payment on it. And in fact, they can. And one of the things that we're beginning to see, because the financial services community is beginning to understand this better, they start to look at this as if I do a reverse mortgage instead of a conventional mortgage to refinance my existing mortgage, can I make a payment, and is there an advantage to that? And the answer is yes. You can make a payment every month if you choose to. You don't have to. But if you do make a monthly payment, you're actually paying that money into a line of credit that you can draw back out at a later date. So they get all the advantages of making a payment, keeping the loan balance down, reducing the interest that they're going to have to repay. But at the same time, they're giving themselves access to that money in the future should they need it.
Because it's a first lien line of credit, basically.
And we've got some great stories we want to share with what some of those needs are. Let's hit some of the other misconceptions, and we'll go back to some of your great stories about how people have actually implemented and used this money.
Well, as we touched on, there's a concern that this is going to step in between, that this loan would step in between them and their heirs, and that the heirs are going to not have future access or ownership to that home. And that's not the case. This loan, like any other, is simply a first mortgage on the home. Should the last homeowner pass away, whoever the heirs are to that home would become the rightful owner of that home. Now, they cannot assume the mortgage. So like any mortgage, the mortgage is going to come due, but that homeowner can either sell the property and pay off the mortgage. They can use for life insurance funds to pay off that mortgage. They could refinance it into a conventional loan, keep the property, turn it into a rental property, whatever they like. But they have not lost the opportunity to pass that home on to the onto the heirs.
Oftentimes those homes are, a very emotional piece of family history or what have you that family members want to keep.
That's exactly right. And and the other big misconception is the one that they think that perhaps they're going to be put out of their home before they want to, that they can lose their home. And we hear this all the time, and that just can't happen. Under the federal regulations that guide this loan, as long as one of the homeowners is alive and living in the home. So even if a spouse would pass away, as long as the remaining spouse continues to live in the home, keep the property taxes paid, keep the home insured, there are no circumstances under which they can be put out of that home, no matter how long they live and no matter what that mortgage balance grows to be. And one other misconception has to do with the proceeds. Many people believe that they think of it in terms of, as Tom mentioned, that they can be receiving a check every month, that they're actually, they look at that as receiving income. And that's, it is in essence some additional monthly income, some additional cash flow, but it's not considered income. It's not taxable. These are tax-free funds. You don't report this income to the IRS as income, and therefore it has no effect on your Social Security, has no effect on Medicare.
It's almost it's like almost like a life insurance policy. When you're borrowing against your life insurance policy, it would be a similar thing, because it's a loan from that policy
and you're
or
just
product.
utilizing your equity, which is yours. It's if you consider your home to be a large savings account, you're just withdrawing from that equity in that home, that value of the home. So it's not income from goods or services produced. It's your equity that you're accessing.
And I'm so glad that you've brought this point up. This is what's so important, especially the life insurance analogy. See, people think of their home differently than they think of their checking account or their money markets or their IRAs. They don't think of equity as being money, but in essence, that's what the equity is. And this is equity that can be drawn. And so they think, though, that by drawing these funds, and that means that they're going to have less equity in their home later, or perhaps no equity in their home later, that somehow that they've lost something, somebody has taken something from them. And of course, that's not the case. It's just like for that person who has a life insurance policy that perhaps has a $500,000 death benefit, decides that, gee, I could really use some of that money today. It could be of more value to me or my family today. And so they choose to draw some of that money out, borrow against that life insurance. They use that cash flow today. When they die, they have less of a death benefit. Well, the reverse mortgage is no different. You're going to have less equity in your home later because you've not been making a monthly mortgage payment.
Of course.
But you didn't lose your equity. You used it.
Yeah, you used it earlier.
That's
utilized it.
And for the people who have a large mortgage payment every month, this makes a big difference
Huge.
when they can pay that off.
You're listening to Real Estate Radio Denver here on News Talk 710 KNUS, and we're talking about reverse mortgages. We're really going to give you plenty of information, and I want to offer you Barry Scoles and Eileen Kennedy with Reverse Mortgage Focus have an incredible guide here called The Consumer's Guide to Reverse Mortgages. I would love to get this in your hands. So to do that, you've got a couple of options. Our off-air number is 720-515-1818. You can leave me a detailed message with your contact information. I will get this to you. I will put you together with either Eileen or Barry, or just text me the word reverse to 720-515-1818, and we will get that to you as well. Come right back. We have lots more information for you. Welcome back to Real Estate Radio Denver. I'm your host, Tom Souther, and we're having a great discussion about reverse mortgages. Everybody has heard. You've heard about reverse mortgages. You've probably had that conversation at the parties that and tried to figure them out on your own. And there's so many misconceptions, which I think we've helped you with a number of those about whether or not you lose ownership in your home and you don't, and what happens upon at the end, and how much access to this money do you have, and lots of questions. So we wanted to move on a little bit, and let me reintroduce everyone. I have Barry Scoles, who is the National Sales Manager for Reverse Mortgage Focus. Barry, welcome back.
Thank you, Tom.
And I have Eileen Kennedy. Also, she is a reverse mortgage specialist with Reverse Mortgage Focus here in Denver. And I also have Tom Gysin, the owner-founder of Homestead Title. And Barry and Eileen, I wanted to give you guys an opportunity because some of these stories, we talked about a number of people you have done reverse mortgages for, and the stories are fantastic. You know, it's emotional what some people need this money for, you know, and it runs the gamut, and there's no rules here. So your situation is always different. But there's some great uses where you can take this money to make your life better. Eileen, jump in.
Okay, would love to, Tom. I could spend the whole hour just talking about stories because I have worked with hundreds of clients, and it's really made a difference in their lifestyle. My youngest clients have been 62, and my oldest client was 99. And the 99-year-old woman got it for in-home care, 24/7 in-home care.
And I want to throw that in if I can,
Sure.
Because so many people, I get this all the time as a mortgage professional, and I don't do reverse mortgages. That's why you guys are here. People think that they can be discriminated against because of age.
No.
And they can't on my side of the business, and they certainly can't on your side of the business.
Correct.
So if you're 110, that's fine. If you're 62, that's fine. You know, and the same for me.
Right.
Never let anybody tell you that you don't qualify based solely because of your age, or because you're on Social Security, or because of so many other things. So
right.
anyway,
the youngest
all
for
kinds of
us, they
stories.
do have to be 62.
62.
But there is no maximum.
And we're going to get into some of the details on how you qualify and whatnot. But we wanted to give you some emotion and some of the stories that go here because they're fantastic.
So for my 99-year-old lady, she didn't want to go to a nursing home. And the family promised her that she would get to remain her last years at home. And so that's the reason they did the reverse mortgage.
So that allowed her to stay home.
Allowed her to stay at home and use the money and bring in. She had 24/7, 3 shifts of 8 hours each coming in to take care of her. And she was just
fantastic.
a joy to work with, and absolutely loved that this helped change her life.
So it got her the care she needed
Absolutely.
in her own home.
Yes.
Versus going to a nursing home, which, you know, I've been through this with my parents, and that's not a fun process. It's not.
Most people,
that's good.
if given the choice, would want to stay at home.
Absolutely.
Another one recently, she was 62 years old and she's working full-time, and she doesn't really want to work full-time anymore. She wants to take a part-time job that she enjoys and just get to do what she wants to do. So we were able to close her mortgage, and now she's just doing a fun job rather than a job that was demanding a lot of her time and energy, and she had some health issues, and so gave her an opportunity to retire a little bit earlier.
So let's back through that. So she went from a traditional mortgage, I'm assuming, or...
She did have a traditional mortgage, yes.
Traditional mortgage.
Yes.
So now she has no more monthly mortgage payment
Correct.
in her budget.
Correct.
So, which gives her a huge amount of flexibility
Yes.
within her cash flow, within her
Yes.
budget, to run her life the way she wants.
Yeah. You know, some of the terms that we use in this business, it is all about cash flow and it's all about peace of mind.
Right.
How does it really change their lifestyle?
And at 62, how long will she be able to not make a mortgage payment on that reverse mortgage?
Oh, forever.
Forever.
She has no mortgage payment. Correct.
It's a miracle.
Correct.
Okay. Just wanted to make sure we were clear on that.
Yeah, we're clear on that.
She will never have to make a payment
Correct.
on that mortgage other than paying the taxes and insurance
Correct.
and
I
whatnot.
was just going to reiterate
Fantastic. Okay.
that. I had two other ladies, one of who was born in England, another lady in Costa Rica, and they came to the United States, raised their families. Both of them told me they never would get to see their families again had they not done the reverse mortgage. It just freed up
For
some
international
cash.
travel.
International travel, you know, they're very concerned that they want to have money to live day to day, and to them travel was a luxury, even though they're traveling back home to see family. And in both instances, it was the children who had contacted me to say, hey, can you help mom? You know, she's on limited income now that dad has passed away. What can we do to help them? So that's, again, a real rewarding story. And
So, yeah, and again, you know, their life is enriched in a different way.
Right.
You know, it's not necessarily they needed more cash in their
Right.
in their life, or they needed a medical expense, but that was important to them in their final years to spend more time with their family, who was a great distance away.
Exactly. And,
Fantastic.
you know, one of the things I think Barry had said, but what we talked to them about is, you know, not so much leaving the money when they pass away, but how can they leave the legacy now? How can they leave the memories?
Yes.
You know, how can they do something with a child or a grandchild that is a memory? All my adult children say, we don't want the money when they pass away. We want to see them enjoy their lifestyle now. And how can that help?
Right.
And there's a lot of ways that it can help. And then I think, you know, I'll just end by saying my poster children, this was actually a couple who was referred to me by a financial institution, because most of them don't do reverse mortgages. They called the credit union they were working with and they wanted to refi. But unfortunately, they didn't have the credit scores, nor did they have the income to refi. So they had a fairly big mortgage. It's like, how do we get rid of this mortgage? What can we do and still maintain our home? And I'll try to get through this one without crying, but they came to me and the numbers worked for them to do the reverse. And when we were sitting at the closing table, the husband looked at me and said, do you mean if something happens to me, my wife does not have to leave the property? And I said, no, she does not. And so there were three of us crying at the closing table, because that just made such an impact on both their lives. And, you know, they're still living there to this day and doing well. But just, I think people don't understand all the advantages that the reverse mortgage has to offer in a lifestyle. And that's part of our job as reverse mortgage specialists, is to sit down and say, maybe it's not right for you. And if it's not, we'll tell you that. But let's take a look and see if it can make a difference and if it is the right solution.
And I am never the person who says that every answer is right for every person.
Right, exactly.
You know, it's
Neither
not.
do we.
And maybe a reverse mortgage is not right for you, but get the information. You know, it may be able to make a huge difference in your life, your parents' life, someone you know.
Right.
So again, I'm going to throw out our number because I want you to call us and I want you to get from Reverse Mortgage Focus, the Consumer's Guide to Reverse Mortgages, Separating Fact from Fiction. And we want to get this to you. It's 21 pages. It is full of information. Everything that you've heard on this show today is pretty much in this booklet. And we would love to get that to you. Here's how you do it. Just leave me a message at 720-515-1818, 720-515-1818, and I'll have either Eileen or Barry get this to you, or just text the word reverse to that same number, 720-515-1818, and we will put this in your hands, one way or the other. Get you the information. We know that this, and we can talk about this, that this process for this mortgage is not overnight. It takes a lot to make this decision. People are involved. Families are involved. You want to have buy-in from everybody involved with making this thing happen. So get the information. Please call us or send me a text at 720-515-1818. We'll get you the information, and you can make an educated decision.
That's perfect. We appreciate having the families involved. We love to sit down with them. If they're out of state, I can do a conference call or some way get the information to them as well.
Awesome.
Yeah. One thing I was just going to chime in on was it seems, I don't know what the percentages are, but you mentioned that most financial institutions don't do them.
Correct.
Right? And I think that's sort of probably why there are so many unknowns to the people out there, and even in those financial institutions, right? And so people probably often do get maybe led down a path that is more familiar with the banking institution, which is what they do every day, versus something that is probably, what is this, maybe 3% of the loans nationwide, or what is that percentage?
Or even less than that.
Yeah. We've got to take a break here, and I will say, and I'm embarrassed that this happens in the industry, that many will tell you, not give you the right information because they will not make a commission on this, and that's despicable. You're listening to Real Estate Radio Denver on News Talk 710 KNUS. Come right back. We're going to give you the details on how you qualify for this mortgage. Come on back. Welcome back to Real Estate Radio Denver. I'm your host, Tom Souther, and we are talking about reverse mortgages today. We are giving you as much information as we possibly can so you're a little better educated, because this is a great product. I want to also throw out to you to offer you Reverse Mortgage Focus's guide, the Consumer's Guide to Reverse Mortgages, Separating Fact from Fiction. This is 31 pages, quite a lot of information. I want to put this in your hand, and here's how you do it. You call our show off air, 720-515-1818, 720-515-1818, and you leave me your contact information, and I will have Eileen or Barry get this to you. Or just text me the word reverse, and again, we will send you the Consumer's Guide to Reverse Mortgages, Separating Fact from Fiction. Pretty much outlines everything that we've talked about on the show today, and I would love to have this in your hand so that you can make an educated decision whether this is right for you, for your parents, for your neighbor. Maybe you know someone who could really help their financial situation with this product, and we want to get the correct information out. So at the last segment, Eileen, let me reintroduce everyone. Eileen Kennedy, reverse mortgage specialist with Reverse Mortgage Focus, and Barry Scoles, their national sales manager of Reverse Mortgage Focus as well. Welcome back, guys. And Tom Gysin, owner-founder of Homestead Title. So we heard from Eileen some of the heartfelt stories about some of the applications of the customers have used this money for. But Barry, there's a practical side to this as well. It's not all just, gosh, how do we create a better life for our families? But people can actually use this money for almost anything. And you've got some great ideas and ways you've helped people with this product.
That's exactly right, Tom. And this has probably been the biggest shift in the reverse mortgage industry in the last few years, that the financial services sector is finally starting to recognize that this program has some larger applications than just sort of the loan of last resort. We've seen attorneys that have used this loan in divorce settlements. You have, an older couple, they're wanting to divorce. One wants to leave and take equity with her. The other wants to remain in the home. So how do you do that? Do you take a large mortgage against the property, leaving the one that's remaining in the home with a monthly mortgage payment? Do you cash in other retirement assets that may decrease the income stream to both parties? Another alternative was the reverse mortgage. They just did a reverse mortgage on the property. The exiting spouse received their funds. The remaining spouse lived in the home with no mortgage payment, and they didn't have to liquidate other assets. I had a retired banker who had a free and clear home, created a reverse mortgage line of credit, and used those funds to go out and purchase properties in the fix and flip market. Would find a property, pay cash for it, fix up the home, sell it, pay those funds back down on the reverse mortgage, go out, find another property, and do the same thing. A couple of those properties he kept, turned it into rental properties, and created an income stream. So there are many different applications to this product that people don't often think about, but we're starting to see a real paradigm shift in the financial services industry, and they're starting to recognize that this is a tool that can be used in a lot of applications for retirement.
Yeah, absolutely. So, those are less emotional, but what value that you could take that money and generate additional income, or who knows what you can do with that money. Those are fantastic stories.
Yeah, I think a lot. Again, it kind of comes back to what we were saying at the end of the last segment: is that what you don't know, you don't know, right?
That's right.
And I think that's such a great way to put it. And that's what you do know, right?
Correct.
You know what? So go to somebody like yourself that can educate people on the potential uses of it, and if it's a good fit for them.
Right. And again, this is not a fit for everyone.
That's exactly right. It's not a silver bullet. It doesn't work for everyone. But what we find, though, is that people tend to be afraid of the program because they don't understand it, and well-meaning people who have provided them what they believe to be accurate information, which turns out not to be. And as a result of that, there are people that could really benefit from this program that have not done it. And all we encourage people to do is get the facts, talk to people who really understand the program, then make an educated decision about whether it works for you or not.
Yeah, and on that, I know at the break we talked, you kind of mentioned about an attorney that right. Had basically was trying to talk their mother, I think, out of getting one of these, right? And after you educated that attorney, they realized, wow, this really is a good thing. And I can tell you from experience on that too, is, accountants are great and attorneys are great, but they only know what they know.
The attorney, it was a classic situation. It was his employee's mother that was getting a reverse. He tried to step in and block her from doing this. Once we finally had an opportunity to talk with them, he was just classic situation of having all the wrong information, believed that this loan was something that it was not. Once he fully understood it, he said to me, number one, he said, well, first of all, I'm embarrassed. And he said, second of all, I hope that clients that I've advised over the last few years not to do this, I hope they don't find out the truth about the program, because they'll probably come sue me for malpractice.
So we won't mention his name.
We won't mention his name.
We're not gonna go. Well, again, these are just great stories and applications of this product. And I tell you, I told you this early on, I've had my eye personally on a reverse mortgage for some time. I think it's going to be a great tool when I get there. I'm not quite at the 62 point. But speaking of 62, Barry, let's just talk about, and Eileen, some of the qualifications. What do you have to do? Before that, let me throw out our number again. To receive the Consumer's Guide to Reverse Mortgages, Separating Fact from Fiction, this great guide from Reverse Mortgage Focus, please leave us a message on our offering number 720-515-1818, 720-515-1818, or just text the word reverse to that number, 720-515-1818, and we will get you this quite extensive guide with most of the information you need to at least get an idea if this is right for you. But Barry, what are the qualifications? What's the basics on who can apply for these, and how do they get through that process?
The minimum age is 62. So whether you've got one homeowner or two, you want all homeowners to be 62 years of age or older. If one spouse is 62 or older and the other is not, there are provisions to allow this loan to occur, but they're not ideal. And so we certainly want to encourage people to consider this once all borrowers are 62 years of age or older.
Is owners kind of a loophole in this? If you've got, I'm in the mortgage business, so I'm always looking at guidelines where perhaps you have one person in the home who is over 62 who owns the home, but their roommate, for lack of a better term, might be under, but they are not an owner of that property. Does that still work, or do they look at all household members?
Well, they don't look at household members. It is what you have to have are whoever is going to be a borrower, they must be 62 years of age or older and occupy the property as the primary residence. So they don't have to be spouses. We've done it with sisters, brothers. I had a mother and son. They were both 62 or older, and they were living in the same home. There doesn't have to be a familiar relationship, but they must live in the property as their primary residence. They must be 62 years of age or older.
Which is a great situation with a parent and a child, because that's tied up not just to the passing of the parent, but to the child as well.
And the loan has to be done on a primary residence. You can't do a reverse mortgage on a rental property or on a second home, although you can, if you own and occupy a duplex, triplex, fourplex, you can do a reverse mortgage on that property. So you're actually doing a reverse mortgage on an income-producing property, but it's one that you occupy.
You live in.
Or it's one that you're purchasing. This is one of the most misunderstood things as well. You can purchase a home using an FHA-insured reverse mortgage. So if you've got a home that you're selling, it's not working for you any longer, so you want to sell that home and use the proceeds from the sale of that home as part of your down payment. You can then finance the balance of the purchase of that home using a reverse mortgage. But again, you must be purchasing a primary residence.
Primary residence. What are the credit requirements?
Well, there are no credit score requirements. So a borrower can have high credit scores, low credit scores. These are not an issue. There are a couple things we do have to look at on credit. If they happen to have some IRS tax liens or other types of judgments that might cloud their title, we have to take a look at those. They have to be paid as part of the closing. But the fact that they have those in their background that have impacted their credit scores would not be an issue for us.
So you could, if you had an IRS tax lien, use proceeds from this,
absolutely,
from a reverse mortgage to clear those for yourself.
That's
okay,
correct.
Great.
That's correct.
But no credit score requirement,
no
really.
No credit score requirements. No income requirements.
So you don't not qualify because you're on Social Security or you have very low income or very fixed income.
You have to. The reason why those matter in a traditional mortgage, Tom, as you know, is because the underwriter's making a decision on your track record of having paid your debts in the past and your ability to pay your mortgage payment. Well, we don't have a mortgage payment. This is a collateral loan. What we're mostly concerned with is the home, not the borrower's ability to repay, because the home will be repaid by the sale of the property.
What about condos and townhomes?
They meet all the same. They must meet all the same requirements as other FHA loans. We can do single family. Townhomes are treated like single family homes. Condominiums have different requirements, both in forward mortgage lending and reverse mortgage lending. They must meet certain criteria. But if they meet those criteria, we can do a reverse mortgage on a condominium.
And I'm going to clarify or put some disclaimers on the townhome thing, because being in the mortgage industry, the townhome or condominium is not necessarily a type of construction. You can have a townhome that would be a condo that would be more restricted than some others. So I just don't want people calling me and saying, you told me this townhome was going to work. Those are case by case.
You could have a single family condo.
Disclaimer.
I mean, condos don't have to be attached properties.
That's
so
right.
It all has to do with how the
legal.
That's right. Yeah. When they built that subdivision.
Exactly.
I just know I'll hear about that sometime over the condo thing.
Barry, what about the max equity? What is the amount they can tap into?
Under the new guidelines, October 1, some new guidelines went into effect. So the information I'm providing now are based upon new programs. So I want to make that clear, because people who may have looked into this in the past may have seen that the amount of equity that they could tap into might have been slightly higher. But as of October 1, now the amount of equity that a homeowner can draw is going to range between 50% and 66% of that home's value. So, where they fall in that 50 to 66% range is based upon their age, because that's how a reverse mortgage loan amount is determined, is based on age, home value, and interest rate.
All right. Hey, we're going to have to cut this short a little bit today. This has been absolutely tremendous information. I want to so thank Barry Scoles and Eileen Kennedy from Reverse Mortgage Focus for coming in today and helping you learn about this product. It is a great product that you need to have the right information. So again, I would love to get you the Consumer's Guide to Reverse Mortgages, Separating Fact from Fiction. Leave me a message, 720-515-1818, and I will get you this huge document. And come back next week. We're going to have a great show for you then. Thanks.